Holy schmoly, we have a massive video to get into here today. We're going to be talking about the Delaware Chancery Court, the Supreme Court, allegations from AMC investors, the reverse split coming this week, the economic data, Fed Jerome Powell, Nvidia earnings, AMC's Ortex data, so many different things, FTDs, some of the option activity that we seen last week around that $4 put that did indeed expire out of the money. That could have massive implications for this upcoming week. So many things to cover. I'm going to do my best to make this video short, sweet, straight to the point. Anytime I say that, it's like 20 minutes long, but we'll try here in this video. So let's start with the first things first. And an AMC investor takes the conversion fight to the Delaware Supreme Court. The deadline set for responses to motions for stay pending appeal. Public interest favors a stay, says the objecting investor. The Delaware Supreme Court set a Friday deadline for responses to requests to halt a stock conversion pending the appeal of a settlement allowing AMC Entertainment to move forward with a plan opposed by many of its retail investors. One of those objecting investors, Rose Izzo, seeks to stop the conversion from happening before Delaware's highest court can consider an appeal, according to a motion filed Wednesday by her attorneys. The conversion cannot be undone, and if this court rejects the settlement following the conversion, a clawback of the settlement consideration may be impossible on remand, they said in the filing. The movie theater chain got approval to do this, and that was not last Friday, but 2 Fridays ago. The lower court denied a motion by Izzo to stay the conversion pending appeal. The public interest favors a stay. Thousands of stockholders are watching this settlement, many of whom value their individual rights more than the settlement consideration, Izzo's attorney said in the motion filed to the state's Supreme Court. AMC plans to enact the conversion by the end of the week, according to court documents. Now, basically what this is saying is Rose Izzo, she basically filed with the Supreme Court because the lower, just Chancery Court, let AMC go about with doing this conversion. Now, what she's trying to do, presumably I'm going to use, is trying to get the Supreme Court to actually block this and go through the proper court litigations, because her argument is that after the fact, there's nothing you can do. Nothing you can do. You can't unenact the reverse split in that way, right? You can't undo the settlement. So I think this makes an interesting case, and usually courts, if there's even any kind of remote argument at all, they like to kind of delay things so they don't get anything wrong, because then it can come back on them and you can have a really nasty situation. So we will watch for this over the rest of this weekend, heading into the beginning of the trading week, to see if there's any developments here. This could have a possibility to delay the actual reverse split. Now, the reverse split is scheduled for August 24th. How this is going to work, it's pretty straightforward. It's pretty simple. If you've never been through a reverse split, well, definitely pay attention. So you don't have to do anything. It happens all for you. You're going to wake up coming on Wednesday. I believe that is a Wednesday, August 24th. It might be a Thursday, actually. You're going to wake up and you're no longer going to have 1,000 shares. You're going to have 100 shares. But instead of your 1,000 shares being worth, what, $4,000? It's going to be worth $4,000, but you're going to have 100 shares. So nothing's going to change with the value that you have. Just the amount of shares are going to be different. The price of each share is going to be more because you now have a just more condensed piece of the company, if you want to put it in those technical terms. So nothing's going to happen. The reverse split itself should not cause anything directly. Now, one argument to be made that reverse splits usually have a negative outcome. A lot of stocks do fall after reverse splits. But at the same time, reverse splits can allow a stock to move more freely to the upside because the amount of shares outstanding is less. So that $1 million or whatever number you want to say going into AMC is going to move the stock potentially a lot more in both directions. So this is an interesting situation, development that we want to watch throughout the rest of this weekend, as well as heading off into the beginning of trading next week. Now, there's a couple different ways this thing plays out. there's a lot of shorts. There's a massive short position. And it would make sense that after the arbitrage trade, after all things are said and done, after the reverse split, you would see shorts actually close out of their short positions. We know this is more of an ego kind of battle than anything else. So that is not a guarantee. We don't know what's going to happen. Shorts might do what they did after AMC dropped 35% and double down on short positions. That's what we just seen. That could happen again. Or shorts could run to the exits and you could see the MOAS shortly after the reverse split is actually enacted. It's very uncertain what's going to happen, and we have no exact clarity. Now, there's other factors that we can look at that kind of can help point us in the right direction. And one of those is the FTD numbers. Now, the FTD numbers are off the charts insane. The FTD numbers, what we're seeing right now and what we will be seeing for the start of trading is about 10 million FTDs that come due, and then on Tuesday 12 million FTDs that come due, the day after that 11 million, and then 12 million on that following Friday. So it's possible the closing out of FTDs could be very good and positive for AMC, right, and could drive the stock higher. What we've actually seen after the reverse split was approved by the courts is an uptick in FTDs. That's what we've seen. Now, over the next couple of weeks, as we get more of these FTD numbers that come out, we'll get more clarity to are FTDs actually being covered on or closed out on, or are we just seeing more of them? It's really hard to say right now. Based off some of the price action we've seen, maybe some FTDs have been closed out. That would make some sense to me. That's another factor that you need to watch for this week, as well as that the Stonko tracker data and the option activity. The option activity is something you want to watch pretty closely as well. You have 106,000 calls in the money, 243,000 calls that are out the money, 121,000 puts in the money, and out the money puts at 476,000. So you do have a lot of option activity this week, and there is a lot more room to see more of it. Last week's option numbers were insane. You had over 1 million puts total last week, and you had about 750,000, a little bit more than that, about 850,000 calls on last week's expiration as well. Now, a lot of calls did go into the money, into the money at that $4 strike, because AMC did close at $4.03 in after hours. And if we take a look at the option activity, the option chain for last week, the $4 put, I think, is even more exciting. At the $4 call, you had 120,000 that expired in the money. Now, what this means is basically options take a couple days to actually settle. So if you actually exercise something, or you are on the losing side of an option, especially if you're a hedge fund or institution, which these trades are, just the sheer amount of them, most of them are from big money. Well, you have 2 days to, buy those shares or receive those shares. So that means starting off this week, on Monday and Tuesday, that's where you could see a lot of the effect from the $4 calls expiring in the money. Again, 120,000 of those. And the $4 puts that expired out of the money. This was a major battleground for hedge funds and institutions. And it looks like AMC did win this one. The stock closed, again, above $4 per share. And you had 204,000 puts that expired out of the money at the $4 strike. So what this means is you could see a lot of buying pressure starting off the week next week. All in all, you have, 324,000 options that did indeed expire against the hedge funds and institutions at the $4 strike. So if we go ahead and throw some of these numbers into the calculator, you times that by 100, representing individual shares, that's could be as high as 32.5 million shares that need to be bought or de-hedged for by the market makers. So that's very sizable. Relative to what we see on any given trading day, very considerable amount of volume. What you have seen recently is higher elevated activity, right? 750 to 70 million shares trading hands every single day is not too uncommon. Well, what you've seen before then was 15 to 25 million shares trading hands. So putting it into those relative numbers, this is a huge amount of buying that might need to take place with AMC. Now, as you guys know, what's actually happened with AMC's stock itself, you fell 35.5%. Short sellers took that opportunity to short the stock. They wanted to really crush this thing. And what has happened ever since? AMC stock rallied 8.5% the next day, followed by a 2% rally, followed by a 7.5% rally, and then followed by what we've seen on Friday, an increase of 1.24%. Every single day since the 35% drop, it has been positive. And I think there's a clear answer for this. Obviously, you have FTDs, you have other things that are going on, but AMC's business is in a much better shape. This 35% drop was pricing in more than just the conversion of APE and AMC. It was pricing in a lot of dilution for AMC stock as well. And I think a lot of people jump the gun on that dilution narrative. This simply allows AMC to raise capital at some point in the future if they decide to. AMC could never raise capital. AMC could nuke the stock. There's a lot of uncertainty on where we're actually going to be. Odds are, my personal opinion, you're not going to get dilution right away. And that's what the markets, hedge funds, institutions are hoping for. That's what they are really needing to see right now is dilution, or their trade is going to be literally unprofitable, even more so than it is right now. And we'll take a look at the cost of borrow fees in just a second. So that's something that was overblown, and you're seeing this recorrection back to the upside. And the fact that you did close over $4 per share is a huge sign, guys, and you should not discredit that at all. That's huge. That's massive. That's a very, very big deal. And ultimately, the fact of the matter is, let's not forget this, shorts have to cover. All shorts must cover, especially when you're seeing some of the numbers that we are seeing. Take a look at the cost of borrow fees. Cost of borrow fees from Interactive Brokers, which does favor hedge funds and institutions, or Canadians, because Canada, I hear it's really hard to get a brokerage account in Canada. Let me know down below in the comment section if that is true. Interactive Brokers is one of them, but hedge funds and institutions are the vast majority of Interactive Brokers clients, so they tend to get preferential treatment when it comes to shorting stocks and interest rates they pay on that. And you still have 879% cost of borrow fees with 0 shares we last knew were available. Cost of borrow average, 950%. Cost to borrow max, 1,060%. Cost to borrow minimum, 8.6%. This means you're paying these interest rates every single day, divided by 365 days. So 1,060%, let's go ahead and pull that in a calculator, divided by 365, because you pay interest even on the weekends. Oh, dang it, I did that wrong. That's 2.9%. that hedge funds and institutions on the high end are paying every single day. So you times that by 30 days, and you're at an 87% loss. Times that by 60 days, you're in a massive pickle. You're in a massive shit show. Can we just call it for how it is? Now, let's take a look at the average days out on loan, because I think this does put this kind of in perspective, right? And let me see. Out on loan, average days. 130. You're 4 or 5 months on your average short positions, paying these kind of cost of borrow fees. I don't even care if the cost of borrow fee was half of, 8% every single day, which that would be 100 and what, 60? 365 divided by 2. Yeah, it'd be like 170, right? 180 maybe. Bad at math. Okay. Yeah, don't judge me on that. But nonetheless, you guys understand, if the cost of borrow fees were even dramatically lower, the amount of time that these shares have been out on loan, well, you're unprofitable. So what the hell are you doing now still in this short position? Makes absolutely no sense. Let's take a look at the dollar amount that's currently sold short in AMC as well. 591 million. Estimated short interest of free float, 28.34%. Free float out on loan at 40.87%. Shares out on loan, 211 million. Days to cover, 7.35. Cost to borrow trailing 3-month average, 313.25%. This is actually starting to go up as well. So if you look at the 3-month average of 313%, you're going to be sitting at about 0.8% that hedge funds have had to pay every single day for the last 3 months. There's no win here. This is a lose-lose for any short that is in this trade. You have 84.6% utilization as well. So everything I'm looking at here just points to you are primed for a massive short squeeze. And that's ultimately what is going to happen. Let's be 100% honest with ourselves. That's what is going to happen. Now, other factors can also make this a little bit more dramatic, including what happens in the broader markets, what happens specifically with your big tech names. Now, what we're going to have for this week is 2 major catalysts. Number one, you're going to have NVIDIA earnings. NVIDIA earnings is going to be Wednesday and after hours. NVIDIA could take down the entire markets. I think you guys understand exactly why. NVIDIA really propelled the markets higher last earnings, and I think the expectations are too high. No matter what happens with NVIDIA, as long as we don't get a huge, massive guidance raise again, the stock's probably going to fall. That's just, it doesn't even matter what happens with the numbers. Stock's going to fall unless we get a big guidance raise. Now, if you do get a guidance raise that's maybe smaller and just NVIDIA beats all around, I wouldn't expect the stock to absolutely collapse. I wouldn't expect a 20-30% drop. I actually think there's a 85% chance the stock moves up or down 3 to 5%. I think there's a 5% chance you get a 20-30% drop if you don't get good guidance raises, or you see NVIDIA fall short of their estimates that they set out for last quarter, which is possible. I assign like a 5% probability on that. And I think there's about a 10% chance NVIDIA does guide up big and actually does move higher after earnings. So the odds are definitely skewed towards a fall in the markets based on NVIDIA earnings, in my personal opinion. Now, what we're going to have for next week is not a lot. You are going to have durable goods orders Thursday, month over month for July, and you're expecting negative 3.8%. Last month's reading was positive 4.7%. So you're expecting some pretty ugly numbers coming from durable goods orders Thursday at 8:30 a.m. On Friday, that's going to be your big day because you're going to get a speech from Fed Jerome Powell at Jackson Hole. Now, Fed Jerome Powell, I don't think this is going to be as big of a shocker because we got the Fed minutes on Wednesday, and the Fed basically said there's upside risk to inflation that they may have to raise more. So it's not like it's going to be a huge surprise if Fed Jerome Powell reiterates the same thing. Now, obviously, could this cause short-term, downside or pressure? Yeah, that's obviously possible. And if NVIDIA has bad earnings on Wednesday, you're already going to see some downside pressure, and these two could feed into themselves and create a pretty perfect kind of storm for stocks to fall. Now, what we have seen recently is AMC has actually been rising as stocks have fallen in the markets. AMC has kind of inversed the S&P 500. If you take a look at the S&P on a daily candlestick chart, boom, that's what the S&P is doing. And this is what AMC is doing. They're inversing. And a lot of this does have to do with the bond market as well. When the bonds, and you can look at this using TLT, when TLT falls, while the notional or the dollar value of bonds are falling, that's bad for hedge funds and institutions that are using those as collateral, which is supposed to be the safest asset in the world, but moves like a damn meme stock. Well, that's bad. The market's falling is bad, so you're getting squeezed of collateral every which way you're looking out there, even crypto. Everything's kind of falling. At the same time, AMC is going higher. This creates a pretty ugly scenario for hedge funds and institutions pretty dang quickly. So I ultimately don't know what's going to happen. There's a lot of uncertainty. The judge could block this conversion from going through right away. But as of right now, we think it's going to be on Thursday that we're actually going to get that conversion. And from there could be a lot more volatility, obviously taking into consideration everything else that is happening in the markets as well. So that is going to do it for this video. If you learned something, if you like my perspective, or at the very least you want to stay up to date with everything going on every single day until this MOAS trade does happen, well, hit the like button and subscribe to the channel. We've been going strong at this for over 2 years now. There's no other place to be than right here. So thank you for watching. If you guys want to come trade with us live in real time, if anything pops off, anything happens, we post our trades in that trading community. Great place to be. A lot of great members over there. Check it out. Link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.